Hey guys, hope everybody's doing well today. Hope you had a great week. I had a busy one, but it was fruitful and always appreciative of that. If you're new here, please like, share, subscribe, do all that good stuff. If you're looking for information on ETFs, little bit of options, some income strategies, this is a place to be. Down in a pinned comment below is where you can support this channel with all my affiliate links, and I do appreciate a lot of you have been using the Amazon link. I appreciate it. A lot of you have used the M1 Finance link and signed up with M1 Finance, who is still giving $30 for each new account that puts in $100. So that's an instant 30% return on your money, which is awesome. But today I wanted to talk about an ETF, and I wanted to talk about how to examine an ETF. You know, it doesn't have to be too complicated, but I wanted to show you how I do it, and I try not to make it, you know, too difficult, but I like to know what an ETF does. And you know, probably you can tell by the title, this is on the DGRO ETF, which is the Ishares Core Dividend Growth ETF. And I've been digging into this one. Well, that's a lie. I haven't been digging into this one. I'm going to dig into this one in this video, and I'll probably make a decision on it, whether it's good for me or not in the future. So let's get started. And so the first thing I like to do is I don't like to go on Seeking Alpha and read the, you know, bear and bull articles of the ETF. You know, if you go on Seeking Alpha, which is probably one of the more popular places, you'll find both sides, and it can confuse you. You know, anytime you're looking for an investment, you're always going to find the bull case and the bear case, or the pros and the cons, and it'll confuse you. What I like to do first is get to know the ETF and see if it fits my my core, you know, investing needs, right? And then I can go out and look and see if find some articles, whether you know, the overall sentiment is bullish or bearish or whatever. But I usually don't put too much weight into other people's write-ups on it, right? So what I like to do is go straight to the issuer's website. So if you're looking at a Vanguard ETF, go look on the Vanguard website. If you're looking at a Fidelity ETF, go look on Fidelity's website. So today I'm looking at an iShares, which is DGRO. So I'm on iShares website, and we're going to go over the DGRO. Now, first thing I like to do is just go over the overview here is why DGRO, right? And, you know, it says DGRO offers low-cost exposure to U.S. stocks focused on dividend growth. Okay, great. Number two, access companies that have a history of sustained dividend growth and that are broadly diversified across industries. Awesome. And number three, use at the core of your portfolio to seek income. I like it. I like it already. But I'd like to know some details of this, right? So it'll tell you the investment objective. And it says it seeks to track the investment results of an index composed of U.S. equities with a history of consistently growing dividends. I mean, it sounds good, but what I like to do is dig a little deeper. And what you'll find is either under literature, or on the iShares site it says prospectus. Now, when you open one of these, it could be overwhelming, right? Because the prospectus is basically the rules, the nuts and bolts, the guidelines that this ETF have to follow. You know, it's the rule book, it's the law of the ETF. And so it's really important, if you haven't read one of these, at least read one. And I'm not going to read the whole thing over on this video. It would probably take an hour, but it's really interesting, and it gives you a lot of information, like managers, who's managing the fund, how long they have been there, what will they do if the index changes, how do they treat taxes. All that is in the prospectus. So what you would do is click on the prospectus, and what I like to look at, what we will look at here today, is the summary prospectus. Okay, we'll click on that. We'll zoom in a little bit. And then what I like to do, here you go. Look, before you invest, you may want to review the fund's prospectus. So it's always good. Just read one of these days. So investment objective is going to be the same thing you saw up there. Fees and expenses. It'll tell you what fees there are, and it's 0.08, so really cheap for this ETF. It'll give you an example of how that works out. It'll tell you about portfolio turnover. Now, portfolio turnover is when when the index changes, how many stocks that they have to sell and replace to adjust to the index that the ETF follows. So here we have a portfolio turnover rate of 24%, which is not extremely low, but is not extremely high either. But what the good information here is principal investment strategies. Now, instead of this generic investment objective, you'll at least get a strategy here in the summary. And the fund seeks to track the investment results of the Morningstar U.S. Dividend Growth Index, which is a dividend dollars weighted index that seeks to measure the performance of U.S. companies selected based on a consistent history of growing dividends. Now you can come down here. I'm not going to read everything. I'm going to read the important stuff. Eligible companies must pay a qualified dividend. So that tells me that there's probably not going to be any MLPs or no REITs in this ETF. They also must have at least 5 years of uninterrupted annual dividend growth, and their earnings payout ratio must be less than 75%. So they need to be consistently raising your dividend, giving you a raise. They need to be a healthy payout ratio of under 75%, meaning they need to pay out a comfortable amount from earnings. 75% is kind of high for stocks. They're paying from their earnings 75% or less in the form of a dividend. Companies that are in the top decile based on dividend yield are excluded from the underlying index prior to the dividend growth and payout ratio screens. So they're not looking for the highest dividend yield. They're looking for quality dividend yield and quality dividend growth. Okay, the underlying index will include large, mid, and small cap companies and may change over time. As of April 30th, 2020, a significant portion of the underlying index is represented by securities of companies in the financials, healthcare, and technology industries or sectors. The components of the underlying index are likely to change over time. So once I get the principal investment strategy, then I go and look at what is the ETF invested in. So we'll go right back to the website and we'll scroll down. I look at performance last, to be honest with you. I will actually also look at the PE ratio. Yes, ETFs have PE ratios. They take the entirety of the fund and get an average. So the PE ratio of DGRO is 23.04. They have 392 holdings in the fund and currently has a 2.27% dividend yield. Now, PE ratio 23. I like this. It's still a little hot, but in context, like VOO, the S&P 500 has an average PE ratio right now of over 27. So at least you're getting a little bit more value stocks within this index. And I'm more of a value investor anyway. And with being a value investor, your dividend yield will be higher too. So I think the S&P 500 right now has about a dividend yield of about 1.4, 1.5, somewhere in there. And DGRO has 2.27, so that's nice. Sustainability characteristics, if you're interested in ESG, that's where you'll find that information. Business involvement metrics, I pay no attention to these, to be totally honest with you. And we'll look at the holdings. As of February 17th. I like going to the website owners, because they have to report their holdings every day. So at least, because there's sometimes you'll look in other websites to find the holdings of an ETF and they'll be all off because they don't know what's going on. Something may have changed, the last time they updated their system, but on the issuer website, they should be current and up to date. So if we look here, top 10, Microsoft, 3.3% of the fund there. It'll show you how many shares they have. They have 2,163,629 shares. So when you buy a share of DGRO, you get a little piece of that. JP Morgan Chase, 3,615,000 shares. Apple, Johnson & Johnson, Verizon, Procter & Gamble, Pfizer, Intel, Home Depot, Bank of America. And what I like about iShares is they show you everything. You don't have to download a file to go look at it. It's all right here. Cisco, Avgo, Merck, Pepsi, Citigroup, United Health, everyone's favorite, Comcast. That's in like every single dividend ETF out there for some odd reason. At least this one's not in the top 10. Texas Instruments, Bristol Myers, McDonald's, Amgen, 3M, Medtronic, Eli Lilly, Abbott Labs, NextEra Energy, Walmart, Raytheon, Truist Financial, Duke Energy. So we're the top 30, and these are all big recognizable names. The ones that are missing, though, if you are interested, and this is the next thing I look at, is what is it missing, right? Because there's some big names that are missing out of this, and if you're going for dividends, you're going to miss out on those big names. A couple come to mind right off the top. Facebook is not going to be in here. Amazon, not going to be in here. Google is not going to be in here. Berkshire Hathaway won't be in here. Tesla won't be in here. So, if you have a desire to be in those shares, then maybe you'll need to add a satellite holding to this holding that you have. So, or if you're like in M1 Finance, you can just add it to a pie, right? That's the beauty about M1 Finance. Referral link down below. $30. Okay, so now we can see the exposures, where they're at, how heavy are they and what. And this is what I like about DGRO. Information technology makes up about 21% of the fund. I believe technology, everybody says it's in a bubble, but I believe technology is never going away and it's going to infinitely grow. That's what I think. I think it's just going to infinitely grow. Well, at least in my lifetime. So I don't think, is there some bubble stocks out there? Absolutely. But I don't think the sector as a whole is going anywhere. I think it's going to dominate the market, at least during my lifetime, for sure. And you got financials at 20%, which has been strong here in this past 6 months. Came on strong. Healthcare as well at 16%. Industrials at 12%. Consumer staples at 8.8%. Consumer discretionary 7.3%. Utilities at 7%. That's a nice life preserver. Kind of a bond holding is how I like to see utilities. Communication at 4.3%, materials at 3%, and what else is it missing? 1, 2, 3, 4, 5, 6, 7, 8, 9. It's missing real estate, and help me out here, guys. It's missing another one. It's got materials, real estate. I'm at a loss, but anyway, it's missing one other sector, and I can't think of it off the top of my head. Energy. Boom. It's missing energy. And I think it's missing energy because of the payout ratio of the dividend in their screening, right? Otherwise, it probably should have some energy here. But since the energy sector got hit so hard, they probably fell out of the screening where they have to have less than 75% of payout ratio and to have 5 years of increasing dividends. So that probably kicked a lot of them out this past year or so. So missing energy, missing real estate. So if those are important to you, you'll need to add those in a satellite holding, in a satellite ETF or individual holdings if that's important to you. But if it's not important to you, then just, you can just buy this fund and that's it, right? So how well did this is called the Dividend Growth ETF. How well did it do? Well, we went over here to, don't see the stats over there on Ishares, but over here on Seeking Alpha, which I kind of take with a grain of salt, but I kind of believe this one. It shows a 5-year growth rate of 10%, dividend growth of 6 years. And if we'll look at that in action when we go to the dividend history, we can click all, and we can see pretty much you're gotta raise, every year. It started out with 16.9 cents, and our last payment was in December for 27.27 cents. So, in 5 years, that's a pretty good rate of raises, in my opinion. And I think that will continue to happen just because of the screening. It's gonna look for those companies that are raising and are healthy. So that's all I have for you guys. iShares DGRO. I like it. It's a good core holding. Right, a lot of these dividend ETFs leave out companies like Microsoft, Apple. Those two are big. I think dividend growth companies. That most ETFs leave out. Most dividend-seeking ETFs leave out. So I think that's a good one for this ETF. I like it personally. I think if you are needing a core holding, DGRO is definitely one to look at. I'm definitely looking at it. I'll share more of that in my next dividend update and see any moves that I've made. I may start a position in this, and my strategy is ever evolving, as you guys probably have realized, and got some big news. Or not big news, but I'll share with you what I'm doing next month, March, first week of March. But this one's definitely on my radar. Hope you guys enjoyed it. Hope you guys enjoyed how I go through and look at an ETF. Hope you guys enjoyed DGRO. If you have any questions, comments, leave them down below. Like, share, subscribe, use those affiliate links. You guys have a great weekend, and we'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.